So today we will study one of the opportunity, which is Havells. Havells company, right now it has fallen from all-time high. This is a chart which is before 3 months, because I have hidden all the 3 months chart, latest 3 months charts for 38%. I don't know where it is sitting now, but what I see from the technical perspective is whenever this stock falls, let me go to the past and then study from 2008, because this backtesting, see, I am applying one of the strategy which my cohort people know, but strategy is not a matter. Basic understanding is a matter. Wait, let me zoom out. See, in 2008 crisis, it has fallen 80%, but again it came up. See, you can say this is crisis situation, it happens, so we will exclude this. Then we will start from 2010. It has fallen 37%, and it has taken approximately 128 days to again recover the 37% of loss by giving you the profit of 52%. Again, ஒரு நல்ல முக்கியமான விஷயம் வந்து பார்த்தீங்கன்னா, whenever it is down from the 200-day moving average, which is my gravity line, when it is deep down or below the 200-day moving average, I will consider the fall. Then again it has fallen from the peak. Again it has fallen to 26%, 30%. Okay, then again it has taken a reversal. Then it took a kind of 101 days to recover 39%. 26%, 29% to give you the profit of 39%. Then after that, when it is below 200 DMA, I will check whether this is it in the pattern or not. For example, 30%, no, 19%, I will ignore it. Okay, then here it is below 30% or not, 28%. Okay, we will keep a range of 25 to 30. Then within how much time it has actually again came back to give you 36% of the gain. Then if it is down from 200 DMA, then I will check the percentage of the fall. When it is from the all-time high, it has 27%. Great. Then how much time it has taken? This time it would have taken much time. By seeing the chart, I can see from here to here 422 days to give you 39% of return. That is also not a bad return. Okay, then if again 200 DMA, below 200 DMA, so if I check here, it's 34%. Then when it is 34%, it has come again in 125 days to give you 45%. And again here it is 200, it is below 200 DMA, 24%. No, I will not take this. Yeah, here again it is coming below 200 DMA. From here it is 24%. 24% we will not take it. 25 to 30 at least we will take. Okay, then from here, no, 21%. Then whenever it is 30% down, see, whenever it is 30% down, after you take that opportunity, if it falls, let it fall. But then also it is giving you 43% of the profit in 237 days. Inga, if you have bought here as per your analysis, if it falls also, no problem. Either you can average it, you can take a decision of averaging. Then what is the current situation? Then from here to here, 28%, like it is coming in our range. Then how much time it took from here to like this? If we keep 39%, 55. This is okay, but still it is more than mutual fund, more than FD. See, what I'm trying to say is whenever the stock is falling, this specific stock is falling by 25 to 35% average, there is an opportunity, then it will come back. But for the comeback right now, it is actually in December. In December itself, it is 33%. Then also, if you have taken the opportunity, then it's a very clear opportunity. But you can say from December right now, it has not moved, Santosh. Yes, the nature of stock market is like that. It is not going to move just after you have bought the stock. Okay, it is not going to know that Santosh has bought the stock, so we have to move up. The stock actually performs its own way, it's because of sentiment. But whether in all the situation, like for whatever the situation we got a good return, like kind of 1 year 30% average CAGR we have bought. But is it the right time? We have to go to the fundamentals. See, again, I always suggest, this is not the suggestion or recommendation, it's purely analysis done on educational purpose, which I am sharing to my close friends and family, the cohort team. I am also extending this knowledge to you so that you can get benefit. Strictly, I am not a SEBI registered analyst or a SEBI registered guy so that I can give a buy or sell call. It's not the buy or sell recommendation, is only for the educational purpose. If this has happened, why not it will happen again? That's my simple thesis. So we have understood technically there might be opportunity, then we will go to screener to understand whether the same opportunity is present in fundamental perspective, business perspective. Always we will take 3-dimensional view. One is understand whether technically there is a structure for giving us opportunity or not. If there is an opportunity, then go to the business and analyze whether the opportunity is actually also in the business, and come to the financials, again back to screener. After understanding the business, after understanding the technicals, come to the business. If the business currently at the good shape to take this as an opportunity. So if you go to the business, go to screener.com and Havells. So Havells, we know the business, but still we will try to study what are their actually products, what are their actually wide range of products they are selling, household goods, electronics, and it's a kind of household, but they have their own cable manufacturing brand also. And this, how to pronounce it? How do you pronounce it? Lloyd என்ன சொல்லுவாங்கங்க இத? LLOYD. Lloyd. Okay. So Lloyd is a AC, but that is actually giving the bigger hit. When I studied the fundamentals, that is giving the bigger hit because they have a different set of problem. We will actually see that also. Okay, they are giving fans, AC, how all the household structures. See, currently we have to understand the position where we are in from the geopolitical aspect. Inflation is rising. People are actually not ready to spend money and do something for their households, their dreams. So the constructions and the new homes, new interior designing, those will also be in a very slow shape. That is the reason the business might be down. We will also see in the financials. But as per this, we are not going to see this business is going to stop or it is going to go out of the market for next 10 to 15 years. So this business is going to really support the consumption theory, premiumization. So I give a good mark for the business. So let us go to the fundamentals and study the fundamental also. This is a market cap of 74. But when you go to this all-time high, 2000 rupees it was trading. Right now it is trading at 1191. Kind of half market cap is done. 40% of the market cap is done, which means 43% it is down from all-time high. So if you have considered this before 6-7 months, it would have been a large cap company actually. Okay, right now it is a mid cap company. Okay, PE is 43 and ROC is 24. Again, it is commendable. ROE is actually 19%. It's also a good criteria. 5-year median PE is 70, but current median PE is more less than the 70. Debt to equity ratio, the company is not having any debt. Pledged percentage, they don't have any pledged percentage. Down from all-time high is actually 43%. Down from 52 week is 26. So best place to see whether the opportunity is there or not. It's again not a recommendation. Observe the market. This is how we need to study the business. This is how we need to study the company to take a decision in the market. So again, we will go to the chart of P. You understand the 5-year median PE is somewhere around 69.7. So on a larger range of time, the market is actually giving the overvaluation because 70 PE is too much high. But 70 PE, when it is staying for 5 years, then the median PE becomes 5 years, median PE becomes 69.4. Right now, it is trading very deep discount from the median PE. So 10-year PE, if you consider, it is also 64, which means always the stocks trade at higher higher PE, which is the indication that median PE is 64 and 69 and all. So we need to understand, compared to last 10 years, compared to last 5 years, from the valuation perspective, is it opportunity or threat? It is the right time to enter, not right time to enter. when there is a discount of like median PE is 64 for 10 years and median PE is 69 for 5 years and it is deep down like a median PE of 43, I consider this as a good valuation, good margin of safety to take the position. But it's up to you to take the decision, but I am trying to understand from the investor lens how we can see the market. From the balance sheet perspective, if you see, the fixed asset is actually increased from 4,652 to 5,344. In last update, they have given the higher number, but if you expand it, like land, building machinery, we don't have the data for last year, but we have the data for the previous year. Like building is going up, building plant and machinery is going up, and equipments are going up, everything is going up. So they see a business is going to grow and they are investing it. And right now in a net high level, 4652 to 534 is actually the increase. That increase is partially driven from the intangible asset, which is not going to directly add as a positive comment for us, because I always discount in intangible asset, because intangible means what? The brand value. Brand value does not add any asset in physical terms to the company like a land or building, but intangible is also an asset in the accounting purpose. So I give less importance to the intangible. If we ignore the intangible also, still the land, building, machineries are growing, which means the business is trying to grow. So when the business is trying to grow, then the profit and loss also we actually should correlate with it. For example, sales, it's all time high, but I agree there is a sales growth is less. I understand. For this reason only, I said sales growth means how it can go up. When the people are buying the products, the sales can actually go high and then the growth can come. When the people are not interested to buy at this current situation with all the kind of problems that the IT people are actually facing the layoff problem and other inflations is rising. So these kind of situations always give challenges to these kind of business, but the cycle turns. The cycle turns, and when the cycle return to the original way, when the inflation is normal, when the people from the IT actually also like the threat of AI is removed and the more opportunity is populating in that, then the business is going to thrive. But at that point in time, we will not be able to buy because it will be in a higher valuation, it will be flying in the sky. So we need to evaluate a business when it is deep discounted and see whether it is worthwhile to study, worthwhile to take opportunity or not. So for me, sales is all time high, growth is less. Yes, I agree, but that is not a concern for me. You can take your decision on basis of your analysis. But for me, operating margin 9%, 10%, 13%, 15%, and 10%. See, understand, when the situation of the revenue is actually not growing much, but the expense remains the same. When the expense remains the same, then it shrinks the operating margin. That's the reason it is coming to 10% of the operating margin, but this is also not bad. Okay. Then when we see the profit is also all-time high. See, this one-time profit is driven from the other normal income. I agree. Other normal income means it's not a usual income they get. It's not a business income they get, but there is an additional income which they have got. Maybe because of selling some stake, because of some valuation gap, because of some, for example, the Reliance sold Asian Paint. If you go and see the Reliance screener in the other income, the selling of Asian Paint has given them the income which is coming from the other income. It is not the business income, but the selling of Asian Paint has given them the income. Then that will come in the other income. Like that, they would also done, but it is not drastically high. For example, exceptional items minus 45 is there, 524 is there. So net for 479. From 300 to 479, yes, if you discount 179 also, still it is greater than the profit of last year, which is okay for me. Okay, so profit and loss in year, it's good. Profit and loss in quarter, it is also, as per this highlighter, it is showing yes, green. The tax is less because this is the exceptional income 310. See, whenever there is a capital gain for the company of 310 crore, the tax for the capital gain will be also from 12.5%. When they pay the 30% flat tax for their business revenue or business profit, operating profit, the tax will be high. When there is a 310 crore of other income, it might be actually a capital gain. So the tax is 10% or 12.5% for the specific 310, which will reduce the tax. That is also one reason that the tax is reduced. That's a simple knowledge what I have actually learned last time with Reliance. So with Reliance on the Asian Paint sell, you can go and relate it. So you will find it 21% of the tax reduction may be due to that. Okay, so when the sales and all-time high, and when the sales is all-time high, when the profit is all-time high, yes, definitely. If you discount this 300 also, this 723 minus 300 is 423, which is actually higher than the last quarter, but not higher than the last quarter of March 2025. Yes. So if you discount this exceptional income of 45, okay, 45 is coming in the last quarter. But for me, yes, there is a hit, but it's not a very big impact is what I am actually seeing. When the sales is all-time high, when the business is all-time high in the year-on-year basis, definitely the price has to follow. But when you see the compounded profit growth, it is actually 16% year-on-year for the last year, 17% when you compare 3 years, 11% when you compare 5 years. But when you see the price side, last 1 year CAGR is minus 25. Last 3 years CAGR in the price point is minus 3%. Last 5 years is only 4%. So when the profit is compounding, when the price is not compounding, is the ultimate opportunity for many of the people who know how to analyze the business. So in this area, I consider this is a big arbitrage from the business and the price. See, when you see the investors also, again, one of the important thing which we will see, promoter is holding 59%, FIIs are holding 16%, and DIs are holding 17.5%, and government is also holding. See, if you see the retail people are holding only 5.9%. In the public also, there is no big players. Okay, 5.9%. So taking the business again, once again, back to the all-time high of the price will be taken care by these kind of big players, because they have done it before like this. In the chart from 2009-10, we have seen the same thing repeating again and again. Again and again, this is repeating. You can also see when we see the profit and loss, profit growth is not always all-time high. Minus 14%, 47%, 0, 17, 19, minus 6% of the growth. This is on year. Okay, 37, 18, minus 10, 18, 17. See, this indicates also the cycle of real estate, cycle of consumption. So there will be always a situation where the people will be buying, people will be expanding, interior designing will be there, and home building will be there. So the business expands. In some time, they don't have money, they don't buy anything, the business sits quietly for some time and they work on the expansion. See, this is always a nature. Why? Because I am confident these investors will have to make money. These investors, if they want to make money, they will bring the market up. If they are going to bring the market up, then we have already seen it many times in the chart. Why not now? Why not this time? The price might be down because of sentiment, I agree. But as we also seen the technical aspect, if the price is now discounted, when the business is going good, then you know what actually that means. When the sales is all-time high, profit is all-time high, and the price is sentimentally pushed down, then it's a clear opportunity for analyzing it and taking decision as per your understanding and analysis. So that's how we see. I understand there might be some question. If there are any questions, please put it in the comment section. If I have missed anything, put it in the comment section so that we can study it together. For me, this seems to be a good opportunity to analyze and take further decision. If you have liked this video, please like, share, subscribe, and see you next one. Thank you. Happy investing.